Now, starting us off here with some reaction to all this is Diane Swonk, who's the chief economist at KPMG International. Diane, it's great to have your perspective on the economy. We knew rates wouldn't move, but when should people presume that they'll be paying lower interest rates to try to buy a house or a car or whatever they're looking at? Maybe June or?
We're still looking at June for the first rate cut and 3 rate cuts total, although it is interesting that, you didn't see more of a clustering around those 3 rate cuts. You still had 9 people expecting only 2 rate cuts this year, and many of them would rather push it off into the second half of the year. And I think what you're seeing from the Federal Reserve is that they don't want to raise rates again. That's the good news. But the threshold to cut is a little higher than it was. They're going to be patient about how slowly inflation comes down. They've revised up their outlook for growth and their outlook for inflation a little bit higher on core inflation. But they aren't willing, given the progress we've made on inflation, and this is really important, they're not willing to take a recession now. If economic conditions were to deteriorate rapidly, they would then start cutting more rapidly. They no longer see that as a necessary precondition, but they're also signaling they're willing, with their forecast, that they're willing to be patient and allow the economy to be resilient and keep unemployment low for longer, too.
All right, let me try to dig into that a little bit. You mentioned inflation. We know inflation has gotten better, but it's still an issue for a lot of Americans. I'll put up some numbers here looking at the inflation statistics from the Labor Department over time. And basically, where we see inflation going lately, like if you look back, February 23, we had like 6% inflation, right? And it came down 5% and 4%, so on and so forth. Late last year, 3%. I think February this year, 3.2%. So there's that low, 3.1%. So we're getting to that point where it's manageable, but then when you start moving on rates, like if they cut rates too soon, maybe inflation comes back, right? That's the risk?
Exactly. And, we've only gotten 2 months of data where inflation looked a little hotter on underlying service sector inflation. However, that's 2 months of data, and until they get more data that suggests otherwise, they don't want to cut too soon and get ahead of it and sort of take these cooling embers of inflation and reignite them. That is the risk they face. They also don't want to see a surge in unemployment, but we've not seen that yet. And so they feel pretty confident, given how resilient the economy has been, to go ahead and hold off on those rate cuts and pace them out. This is not the same as coming out of a global financial crisis where they went down to 0 very rapidly, and then they had a very hard time raising rates even up to 2% and holding them there. They had to actually come back off of rate hikes in 2018, in 2019, and people forget we were at a 1.5% to 1.75% rate in February of 2020. The Fed doesn't see us going back there anytime soon at all.
Right. Wouldn't necessarily be a great sign, I guess, for our economy if we were in that sort of situation either. Now, Jay Powell, who's the chairman of the Fed's been holding this news conference, trying to explain himself and the board over the last, half hour, 45 minutes. So it looks like we've topped off, to your point. He spoke about that. Let's see what else we can pick up from the chairman. Let's listen to a little bit of what he had to say.
We believe that our policy rate is likely at its peak for this tightening cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
At some point this year. I'm pushing you that maybe it's June, but what did you, have you seen what he had to say in addition to that maybe stands out? I mean, we're always trying to read tea leaves here. It's not easy, but what did you pick up?
Well, I think they really do. And Fed Chairman Powell really would like to get to the process of cutting. They are sort of balancing this idea of, on one side of it, they do have a lot of people out there saying, listen, when unemployment goes up, it's nonlinear. It can go up rapidly. We don't want that to happen. We don't want to hang on too long.
Right.
But the lessons of history are really littered with cases where central banks cut too soon. And until we can get through whether or not the last 2 months in inflation were a fluke and it cools back down again, they knew the road down in this part would be bumpy, they're not going to cut. And that's what you're seeing but the bias is to cut. It's not to raise again. Right. And that clearly is the important part.
Yeah. Thanks so much for watching. Just go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.